So looking ahead to the weekend market starting January 20th, I know I probably say this every week, but it is looking like a particularly busy one. We've got the impeachment of US President Donald Trump, or the trial of that, and we have the meeting of billionaires and influencers at Davos, Switzerland, going on for most of the week. And then we have three big central bank meetings from Japan, Europe and Canada. Now, in terms of the backdrop to markets leading into this week, we've seen yet again more record highs. That winning streak for US stocks particularly doesn't seem showing no signs yet of any abatement. And, things looking very strong. Obviously, last week we had the signing of the US-China trade deal. The fact that the trade war has dialed down somewhat, one of the big sources of uncertainty out there, has obviously helped markets in the past few months. That alongside easy central bank policy. So stock market's doing very well. European stocks still not quite breaking out. We're stuttering a little bit more than those in the US. As far as currency markets, the dollar, it was a little bit choppy in response to that impeachment signing. There was a little bit of a surprise that actually the US would maintain all the tariffs against China until November next year, until after the US election. And so that was a little bit of a surprise, and so not quite the global reflationary economic boost that some were expecting, so the dollar's been mixed. The British pound spent most of the week recovering some sharp losses at the tail end of the previous week, and the euro pretty range bound, although some interesting comments from the latest ECB minutes that we'll talk about more when we talk about this meeting. And gold and oil prices also stabilizing somewhat after, again, a big sell-off. This time it was more relating to the ceasefire, if you like, between the US and Iran, those havens, as well as the geopolitical tensions that tend to hit oil prices, disappeared overnight, and we saw those asset prices fall substantially. But last week they sort of showed some sign of a base. Now let's move on and talk about just the main events in the economic calendar for the week. So worth noting that on Monday it's Martin Luther King holiday, so US markets will be closed, some of them at least. If you're interested, make sure to check out the calendar on the LCG website. Davos kicks off on Monday and runs through Thursday. Outside of the interest rate meetings, which we'll talk about shortly, we do have UK unemployment, which is an important one and comes off the back of a very disappointing retail sales number last week and ahead of a potential Bank of England rate cut at the end of the month. Also Australian unemployment and a bunch of preliminary PMIs from the UK and Europe, where so far there doesn't seem to be much sign of a bottom as of yet. Right, well, just briefly speaking about Davos, it's a meeting of obviously lots of influential people. I think from a market standpoint, most interesting to listen to what the big investors have to say. There is a bit of a joke that the meeting has become a bit of a contrarian indicator. Whatever the group think is at Davos, that's probably what happened in the past, and things are going to be different in the future. One of the more amusing examples was in 2018 when Ray Dalio, the head of Bridgewater, the biggest hedge fund in the world, said that, what was his exact comment? It was something along the lines of, you'll feel pretty stupid if you're holding cash. Cash is obviously something you hold when you are fearful of what's going to happen in the markets. About a week later, markets completely tanked, more than they had done in at least a couple of years. So that was funny. It was obviously a big contrarian comment. Although, has he ultimately been proven right? Of course he has, because markets are well above where they were in 2018. As I said in the introduction, they're at record highs. But in terms of short-term timing, can be a contrarian indicator, and also good to, I would say, on a longer-term basis, to get the thoughts of these big influential people, particularly those involved in the markets. Now, just talking about this impeachment trial of Donald Trump. In terms of the schedule, there's a bit over the weekend, but I think the first important one is on Monday. That's when we get the official response of the White House to the charges by Congress. I think on Tuesday, Congress then rebuts what the White House has said. And then there's a sort of trial-like procedure on Thursday, and so I think Thursday is the big one inside the Senate, where we'll ultimately know which way this thing goes. I will confess that because markets have been very blasé about this, I'm not completely cognizant of the details of the charges in this particular case. All I can say is in a very rough sense, maybe the people who are following this more closely won't appreciate this, but I don't see any silver bullet at the moment. And again, maybe that will change in this trial, but I doubt it. But I haven't seen the silver bullet that's really going to convince the American public that this impeachment needs to happen. And by that effect, there probably isn't going to be that public pressure on Republican senators to vote against the president. And so, as people have been saying all along, as been priced in markets, probably this is going to go by the wayside. The president won't actually be convicted for the impeachment. And if I'm going to make a judgment several months ahead, I would say that net-net, this thing is probably beneficial to Donald Trump. It enables him to paint the Democrats as just chasing him, trying to remove him from office, trying to undo the democratic will of the people in 2016, rather than focusing on America. So that would be Donald Trump's pitch off the basis of this trial. And it's hard at the moment to see how Democrats get a big win. But hey, I'm not pretending to be a big political strategist. Maybe I'm missing something here. Now, last but not least, let's talk about those central bank meetings. First up, let's talk about the ECB. As I said in the economic calendar there, we did have some quite interesting minutes from the ECB, the last ECB meeting, which, if you remember, was the first one by the new president of the ECB, Christine Lagarde. She seems to have steered a meeting in which there was quite a bit of rebellion against the stimulus that was added at the end of last year. And so even one comment from the minutes saying that I believe the word was, the effect of the stimulus so far has been conservative. And so there seem to be doubts creeping in about whether this quantitative easing program and indeed the negative interest rates are beneficial for the European economy and particularly the banks, which Christine Lagarde will be quite familiar with as the ex-finance minister of France. So net-net, the ECB aren't likely to do anything in this meeting. They still have that upcoming strategic review, but I think the bias in markets is to expect actually a bit of a more hawkish tilt from the ECB, less so going down the same old well-trodden paths of more bond purchases, etc. Bank of Japan, also expecting them to hold steady with no change in interest rates. If you remember, in December, Japan introduced a new fiscal stimulus program, so unlikely they're going to add some monetary stimulus when it's not overtly necessary at this stage, particularly with the yen weakening. Remember, dollar yen is above 110, and so that looks like dollar strength, yen weakness for the time being. Yen weakness generally thought of as being good for Japan as a big exporter. Last but not least, Bank of Canada. The history to the Bank of Canada is that they raised rates, if you remember, in October 2018. It was a bit of a surprise at the time. And then throughout 2019, lots of people were expecting them to cut rates, as other central banks did. They didn't. And now that the trade war's out the way, the US-MCA trade deal between the US, Canada and Mexico, that's all signed. So it seems a lot of uncertainties out the way. Canada's economy is doing all right. And so no real reason to cut interest rates, it would appear, at this coming meeting. And that's good news for the Canadian dollar. Right, I'm going to leave it there. Lots to cover this week, so might have ended up being a bit longer than normal. But if you do enjoy these videos, please make sure to follow myself and LCG on YouTube and social media.